Hi everyone and welcome back to my Forex channel. I hope you're all doing great, and in today's session I will be showing elevated exponential moving average strategy that you can definitely implement into your Forex trading. It seems that all those strategies are out there, but once you try them yourself it simply doesn't work. So I thought I will share a strategy that will be in full details why, when and how to, so it will be so much easier to understand and apply once the key rules and principles are understood. And if you will have any questions for me, feel free to contact me on my social media or my email address. I have also launched my signals group, so if you're interested to take a look or join and follow my trades, you will find all information in the description box down below. As usually there is no guarantees with any trading strategy, so make sure you never risk more than you can actually afford to lose, and don't be afraid to use on demo until you're truly comfortable with the strategy. In this strategy we will be using exponential moving averages of periods 5, 20 and 55. I like to use these three specific EMAs because of how the smooth price comes out in the charts. I like EMAs, but nothing's gonna beat my 25 and 50 moving averages because it just really gets along with everything. But EMA has also a great feature that once a certain exponential moving average is crossed, it can be indicative of a change in the trend direction, and this is where the strategy comes into play. This strategy can be used on any time frame as long as you're aware of the shorter the time frame you use, the shorter the trade will be. To add exponential moving averages, all you have to do is press on indicators, type EMA and triple click. Once you have them on your chart, adjust the settings to 5, 20 and 55. And of course guys, it is important to do the price action technical and fundamental analysis before any entry, but it's also super important to know what to look for in the chart for a buy or sell positions. So you basically searching for the certain criteria amongst these moving averages. So what's the criteria for a buy trade then? Well, the EMA of period 55 should be below of periods 5 and 20. The period 20 should be in the middle, and most important, that exponential moving average of period 5 should be the highest moving average on the chart. And for a sell position, exponential moving average of 55 should be the highest on the chart, EMA of 20 in the middle, and exponential moving averages of 5 should be the lowest on the chart. Of course, all the traders who will be using this strategy needs to be aware that all prices does move in waves, and let's say as an example you got into a trade on a closed candlestick as a strategy requesting you, but that candle closed after a particularly impulsive move, so you could potentially face a pullback with a result in a drawdown before the actual trade starts to go in your direction. And this is why I mentioned about all those possible analysis you could do before an entry. Check economic calendar or any other trusted website before trading, just to avoid any high impact news, and ensure that you have a good risk management, like good a stop loss level and take profit zones. So the first example is for a buy trade on GBP JPY 1 hour chart. I have identified horizontal areas of sensitivity because of the multiple rejections, clearly showing that every time the price was in the contact of a support, it chewed towards the upside. We can also spot a squeezed pattern formed by uptrend and a downtrend merging into one point. So what are we actually waiting for is we're waiting for the break to our uptrend, and basically for the moving averages, exponential moving averages, to be in the place as a buy trade criteria is asking for. So let's actually play a replay tool on and see what's basically going on. The price is fluctuating, it broke a little bit of our upward trend, but the moving averages is still not in the right place. The price also respected our support zone, and as we can see it's going into the squeezed pattern, and the moving averages are basically going now towards the upside. So as you can see, we do have a break to our uptrend. The moving averages of period 5 starts to go towards the upside, and it needs to be above of 20 and 55. So we're waiting for the price action confirmation, and this is that price action confirmation because we have a bullish engulfing candle. Of course we could potentially enter over here because of the MACD crossover, but this wasn't the break, so this is where I would be entering because of the push and exhaustion exhaustion move. So, you know, push exhaustion to previous area of sensitivity, like in this level. And of course, we can see that the EMA of period 5 is now of the highest in the chart, which is great indication for a buy trade. So this is where we will potentially would be entering our trade on a closed bullish engulfing candle. Of course, we would be taking the trade into the portion size. Once the TP1 reached, we would be moving our stop loss to an entry or near it to manage the risk. And let's play a replay tool on and see how the trade basically went. So as you can see, the EMA of 20 now is in the middle. The EMA of 5 is the highest one, which is, as I said, is a criteria for a buy trade. And as you can see, the trade is keep going on towards the upside, and we actually would be even reaching more than 160 pips. That would be 186.7 pips in profit by only using the key principles for this strategy and your knowledge into regards to your analysis. So here is an example for a sell trade using this strategy. We are this time on Euro USD 1 hour chart. So as a reminder, for a sell trade, the EMA of 55 should be the highest, EMA of 20 in the middle, and the 5 should be the lowest of the chart. In this case, at the moment, the 55 is the lowest. It needs to change. So in this scenario, we will have to wait a break through the lower channel, break our support, retest on a previous area of sensitivity. So more than likely, you know, push exhaustion, bearish engulfing candle for a nice entry. So let's play a replay tool on and see how basically the trade is going. As you can see, we have this huge breakout candle to our lower channel line and to our horizontal area of sensitivity. So we have this huge push and exhaustion to previous area of sensitivity, and we also have a nice bearish engulfing candle for a nice sell trade entry, as you can see. So this would be a nice sell entry because the EMA of 5 crossed another EMA of period 20 and 55. Horizontal area of sensitivity was broken with this huge breakout candle. We had push and exhaustion to previous area of sensitivity, bearish engulfing candle. Of course, once again, guys, don't be too crazy to go for all the trade, and please manage your risk. So probably taking trades into the portion size, and again, once TP1 reach, you're moving your stop loss to an entry to manage your risk. So let's basically see how the trade went in regards to this scenario using 3 exponential moving averages. As we can see, the EMA of 5 is still below of other 2 EMAs. 20 EMA needs to be in the middle, and 55 it needs to be the highest for a sell trade. So as you can see, we will be profiting in total of 88 pips. And with that knowledge in mind, take the strategy and information on board, and don't be afraid to put into the practice on demo account if you need to basically see how you will get along with it. And if you did enjoy my video, smash like and comment down below. You can also check my Telegram group where we're basically dominating the markets with the nice profits. So you will find all the information in the description box down below. And once again, thank you for watching me and have a nice day. Bye.